Well, the Justice Department and 16 attorneys general suing Apple, claiming that the tech giant violated antitrust laws by blocking its rivals from accessing both hardware and software features on its iPhone devices.
We allege that Apple has consolidated its monopoly power, not by making its own products better, but by making other products worse.
And that was enough to send Apple shares into the red yesterday. It sold off on the news, wiped over $100 billion off from its market cap in just one day. And you can see it also lower once again today. We want to bring in Gil Luria. He's D.A. Davidson's managing director. Gil, certainly we saw a lot of jitters play out in the market yesterday on the reaction to that news. How are you looking at it? How big of a deal this could potentially be for Apple's business?
It is a big deal. So the difference between the regulatory scrutiny of Apple so far is that the scrutiny from the EU was about the App Store and access to the App Store. And mind you, that's an important part of Apple's business. It's the fastest growing business, the services business. But this goes to the heart of Apple, to the iPhone. The Department of Justice is coming after iPhone. They're pointing out a series of practices that Apple has engaged in order to make sure that people continue to buy iPhone and not buy Android phones. And if Apple has to remedy all those measures, even if they're successful in mitigating some of these impacts, it will by definition weaken Apple's hold, especially in the US iPhone market, handset market for iPhones.
And how should investors be thinking about this, especially when it comes to the timeline? Because we think back to historical precedents like Microsoft that took over a decade to play out, arguably 2 decades. I think it started in 1990. So we're talking about some very potentially long-term playouts here, but and not necessarily payouts. How should investors be thinking about the short term, the medium term, and the long term?
I think that's right. And I think that's a good analogy. And if you think about what happened to Microsoft, it's not that the Office Windows monopoly was broken. It still hasn't been, even 25 years later. It's that Microsoft was limited in its ability to move into the next waves. Let's not forget Microsoft missed the move to mobile entirely and then was late to cloud. And that was a much longer term impact. For Apple, also, in the short term, there's little reason to think that it's going to impact iPhone sales this year. But if they do have to come back from and withdraw from some of those practices, it will, over time, in the medium to long term, loosen their hold on the handset market, especially in the US. So iPhone prices may not be able to go up as much. It may make it more conducive for consumers to buy Androids, let's say for their kids. And if that happens over time, that is a pretty big headwind to that key iPhone market.
Yeah, but Gil, how strong is this suit? Because I was going through a number of your colleagues out there, the reaction to the suit yesterday, and several of them in their notes this morning bringing up the fact that this is actually going to require the U.S. to write new legislation here from Congress because the existing laws make it very difficult to prove here that Apple operates a monopoly. Do you agree with that, or do you think actually that this suit is very strong and it could prove, given the existing laws now?
I think the focus is less on whether Apple is a monopoly or not. It's more about those business practices around possibly even degrading consumer experiences in order to keep them in the iPhone ecosystem. Famously, the Android to iPhone SMSs, but also things like cloud gaming, access to wallet. These are things that the DOJ can and may be able to compel Apple into changing those practices, allowing cloud gaming, allowing other watches to connect to the iPhone, allowing other wallets to be on the iPhone. All these things, if you make iPhone more interoperable with Android devices, you make it less likely that a consumer trying to buy a low-end phone is going to buy an iPhone, more likely that they'll buy an Android. So the case is compelling not because of iPhone, of how much of a monopoly they have, the case is compelling because they've found some smoking guns about Apple saying that it's degrading consumer experience in order to keep them in the iPhone ecosystem. That's really the crux of the issue here, not how big Apple is and iPhone is in the United States.
So, okay, what's the likely outcome and what does it mean for investors?
So I would say that since this is a long-term headwind to Apple, I would be more focused on the benefit to everybody else. So this is good for Android, that's Google. It's good for application providers, that's Google, that's Meta, that's Microsoft. Other application providers will able to do more in the ecosystem because iPhone will have to open up more. It's good for practically everybody else that serves consumer applications, by the way, including banks that may get more unfettered access to consumers using their own wallet if iPhone it goes beyond just giving you the Apple Pay to allowing Bank of America Pay, Wells Fargo Pay, Chase Pay, then that could open up opportunities for all those companies. So iPhone, Apple has this tremendous base of profits. Some of that is going to now leak and be captured by other application providers in this ecosystem.
All right, Gil Luria, thanks so much for taking the time to join us here. D.A. Davidson's managing director.